Hello, my name is Steve Bigelow with the Candlestick Forum. Tonight's recommendations or stocks to watch might be a little bit lengthy because I discovered something very important over the past few days. And that was there's a lot of information being put out on candlestick analysis on the internet. And I've looked at some of them and they're irrelevant. They're either not the correct signals or they aren't signals to worth or take up time and energy to try to learn because they don't occur often enough to even pay attention to. So what I want to do is kind of bring everybody back to the high probability information that is put into candlestick analysis. First of all, we want to recognize the true signals, the hammers. There's about 12. We'll get to those. But what we have seen in the Dow over the past few weeks is a J-hook pattern. J-hook's very simple. Strong buy signal. A hammer, gap up through the T-line, pulls back a little bit. And where did it pull back to? Right back to the T-line again. And then did a J-hook, which had an implication that this wave right here was going to be the same magnitude as this wave right here. That kept us pretty aggressive on the bullish side because of that information that the J-hook pattern conveys. What was even more important was that J-hook pattern that formed in the NASDAQ, and notice how it started. A bounce off the 50 with a kicker type signal, or not even a kicker signal, kicker type signal. It was a kicker signal. That told us there was going to be a strong uptrend, at least this magnitude. What did that imply? That this wave right here was going to go through this level. And why is that important? Because for the last 6 months, the market's been in a downtrend. And every time it bounced up, it couldn't get to a new high. Now we've changed that investor sentiment. That's extremely important as far as the overall direction of the market, which implies you want to stay predominantly long. And what's the best way to take advantage of that? Here are the 12 major signals. If you'll just concentrate on these, you won't be wasting time and mental energy learning signals and patterns that are irrelevant as far as your overall education on candlestick analysis. These are the ones that occur most frequently and produce the strongest information as far as an investor sentiment change. Then knowing the signals also enhances confirmation of patterns. So here's a best friend signal. We know that if it broke out through this level, it was going to create a strong price move. The J-hook pattern, which we're seeing forming in the indexes, which means they also are forming in a lot of stocks through the years unofficially, and this is just going through hundreds and hundreds and hundreds of charts. The J-hook pattern is pretty much 81% correct, producing a high probability bullish trade sentiment. When doesn't it work? Obviously, the caveat to that is a J-hook pattern is probably not going to work very well. A bullish J-hook pattern is not going to work very well if the market is selling off in a big downtrend. But knowing that the J-hook pattern, when the market is heading up, has two major benefits. One, it gives you a high probability, as we see in the forward chart, of the direction that it's going to move. And two, the magnitude of the move is going to be quite strong. So when we can see something that tells us there's a strong force to the upside forming a J-hook pattern, in this case, it was a kicker signal on our recommendation a few weeks ago on CPNG, we knew that the magnitude of this move was going to be approximately the same magnitude as this move. PayPal just did a J-hook pattern kicker type signal. It can still be bought on positive trading because if it breaks through this level, there's probably a wave 1, wave 2, going into wave 3, taking you much higher. NVIDIA, same thing. kicker type signal right off the 50-day moving average. This is what we call 2+2 analysis. We can see the kicker signal, we can see the J-hook pattern set up, and we can see it's bouncing right off the T-line in the 50-day, telling us exactly what's happening right here. Everybody's buying at these levels. So even more correct trade probabilities is a derivative of the J-hook pattern, which we call the Bobble breakout. The Bobble breakout is merely a J-hook pattern where we can identify where the first selling started. And notice how the T-line held this up. We could be buying aggressively right here because there's a J-hook pattern. And why is a Bobble breakout have greater probabilities than a J-hook? Because we can watch what's happening on a J-hook pattern at the T-line, which nobody has on their charts, whereas everybody has the major moving averages, and that's where they're making their decisions. So if we can see our pattern set up, a J-hook pattern, going through a level that everybody else is watching, we can be much more aggressive as far as buying early. So anytime we see where they fail right at a resistance level and then do the J-hook pattern coming up through, this becomes an extremely high probability trade setup. AZEK. On Monday, we would be buying aggressively. Notice how your J-hook pattern did a bullish harami, telling you the selling had stopped right there at the 50. There's your J-hook pattern, wave 1 going into wave 3. So this is not rocket science. All we're doing is using candlestick analysis to tell us what signals, which imply there's a strong investor sentiment application, that if they're gapping up through a resistance level with a best friend signal, with a Bobble breakout, that's just enhanced probabilities you're going to be in a strong price move. Remember, it works both ways. If you can see sell signals at a resistance level and more sell signals, as you see in QCOM, if QCOM opens lower after this bearish kicker signal, failure at the 200, where do you think the next likely target is going to be? Down here at the 50. Anytime we can see a pattern breakout, kind of a wedge formation, fry pan bottom, gap up through the resistance level, what's our expectation? There's obviously a new strength in the investor sentiment, creating a wave 1, wave 2, going into wave 3. You do not have to be a sophisticated technical analyst, knowing formulas and all sorts of support and resistance level. What you have to do is identify the signals and where they're occurring. So anytime we can see patterns that everybody else is watching, like a wedge formation, a fry pan bottom, and then your best friend breakout through this level, that implies there's going to be a lot of strength. So what are the benefits of identifying the correct candlestick signals and patterns? First of all, they're going to put you in a high probability direction. And secondly, the magnitude of the price move is going to be extremely strong because that's the results of pattern breakouts. Why? Because this is the basis of 400 years of Japanese rice traders observing and using the results of human nature. Come join us. Our chat room has a lot of traders in there that identify good trades constantly, day in and day out, whether you're a day trader, a swing trader, or long-term investor. The information built into candlestick analysis basically puts all the probabilities in your favor at any time. That'll be it. We'll see you in the chat rooms.